Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is October 9th. We're well into October now. The market's still doing crazy market things, so hopefully the downturns are going to continue a little bit more so that we can all benefit from these sales that are out there. Today we are going to take a look at PPG. This is out of the industrial sector. Let's jump right in. And this one should be a quick video. They are all about paint. That is what they do. They are a paint company that has been around for over 100 years. And if you want to know more about them, check them out, www.ppgpaints.com. That's www.ppgpaints.com. That is their homepage where I pulled this from. And as you can see, they have their own paint stores, independent dealers. They sell out of the Home Depot, HD Supply. So you can buy their paints, at your local hardware store or Home Depot, or I'm not sure, but I think that they also would ship it right to your house just like any other company will these days. So if you're looking for throwing some new paint on your walls, this might be one you look at. Obviously, a lot of other painter companies out there, Behr, just several others to choose from. So it's not like they have a niche market or they are the only supplier out there that deals in paints, but they are one of the big ones that have been around for, again, over 100 years. So you may have used some of their products if you've ever done any of your own painting in your home or apartment in the past. Now, the reason we are taking a look at them down today, 3.28% in the negative. So anytime I see a company 3% or plus, I'm going to try to take a look at it, especially one as large as this one. We are talking about PPG Industries, ticker PPG, again, out of the industrial sector. This is a paint company. They closed the day out at $128.76, 52-week range, as low as $107.40, as high as $152.89. So they are floating between that 52-week low and 52-week high. Average volume 1.4 billion. Today's was 1.8, and very big sell-off in the morning. Looks like they leveled out throughout the day, and then a bit of a sell-off throughout the afternoon as well. A lot of volatility there. You can see market cap of 30.325 billion. They do have a beta of 1.21, so they are more volatile than the overall market, and you can see that volatility here throughout just today alone. Price to earnings ratio is elevated, $23.16 per share. This would need to drop significantly for me to be interested, especially in a company this big. I just don't feel like this company, or don't believe this company is growing fast enough to justify such a high PE. Earnings per share, EPS, a nice EPS here at $5.56 per share. Earnings date coming up October 18th. Forward dividend is $2.60 paid out in the year. They are a quarterly payer. We will see that here in a little bit. They have a decent dividend yield, just under 2% at 1.95%. Obviously, if you were to get them back closer to this 52-week low, that would be in the 2% range. Ex-dividend date was today, so that could account for some of this drop. Typically, companies do drop on their ex-dividend date by the amount of the dividend, but this is far more than the dividend they're about to pay out. One-year target estimate, at least according to Yahoo Finance, where I pulled this information from, I am not affiliated, they see a $160.73 per share price target over the next year. Now we're going to go into statistics, look at dividend yield theory to see if this one's presenting any value. To do that, we go down to dividends and splits. Look at their 5-year dividend average, 1.71. Compare it to their current 1.95%, or over here, forward annual dividend yield, same thing, 1.95%. And since it is higher, that speaks to some potential undervaluation on this one. Though I am not sure it's undervalued enough, even if it is. I question whether it is at all. With a PE that high, that is pretty elevated for me. So I would want more of a margin of safety on this one, more of a pullback towards its 52-week low. I just, again, don't see this one growing fast enough to justify this price to earnings ratio. That's pretty high. They do, however, have a low payout ratio, 44.52%. And it looks like, again, ex-dividend date August 9th was today. They're going to pay out September 12th. So that will be coming up. So kudos to those of you who own PPG already. You'll be getting that dividend here. Or I'm sorry, August 9th was last month. We're in October. Oh, goodness, guys. I've been working a lot. You'll have to excuse me. August 9th. So they paid out last month. So you would be in line for the next dividend if you were to buy them now. because they've already paid out this September 12th. We're in October. Apologies. Again, it's late. It's after 6:30. I've been working all day. So forgive me on this one. Now we're going to look at financials. A lot of good information under financials. You're going to find their balance sheet, their income statement. We want to look at free cash flow. We want growing dividends over time. And to have growing dividends, you need growing free cash flow. So 2019, 1.6 billion. 2020, a jump up to 1.8 billion. Now here's where things start getting a little wonky. A drop from 2020 to 21 to 1.1 billion. And even though they bought back 210,000 shares here, I don't feel that, or the math just doesn't work out where that accounts for the drop here. Same thing, 2021 to 2022. Another drop in free cash flow, and this definitely does not, repurchase of capital shares does not account for this drop in free cash flow. That's a huge drop from one year to the next there. So not sure if they had some debt that they wrote down or some capital expenses that they did or something, but that's a huge drop from 2021 to 2022. It looks like they're back on track here in 2023. Obviously want to see where they end the year, but overall from 2019 to date, that is not growing free cash flow, and that is not what you want to see. Now we're going to look at stockanalysis.com. I always recommend more than one source so that you can look at, make sure the information you are getting is accurate, make sure that the information you are getting is updated. Never just trust one source and blindly go with what they say. At least two sources, if not three, to make sure, like I said, the information you are getting is accurate. Now they have 16 stock analysts that have taken a look at this over at stockanalysis.com. They call it a consensus buy. Again, this is not on my buy list right now. There are too many other stocks out in the market that are presenting much better value, that have better financials and a better long-term outlook, in my opinion. But I thought I'd cover this anyway because it was one that dropped down significantly today. They have a one-year target estimate of $130 for the low. That would be a 0.96% increase in stock price because it currently sits lower than their lowest estimate. They have an average estimate of $156.63. That would be a 21.64% increase in the price. And if it happened to hit their high of $172, that would be a 33.58% increase in the stock price. All the while, you could collect that nearly 2% dividend yield. Now, if you go into statistics here, you're going to find a lot of the same information that you found on Yahoo Finance, just presented in a different manner. I like to look at return on equity and return on invested capital. I like 10% or both for both of those numbers. Return on equity for this one is 19.3%, so beats the 10% I'm looking for. And return on invested capital is 13.3%, so beats the number there as well. To be honest with you, the numbers don't look all that bad, just the valuation currently. Again, if this was to drop back towards that 107 52-week low, that would be probably much more attractive than where it currently sits. Even though, I'll be honest with you folks, this isn't even on my watch list. This is just one that I saw that pulled back 3% today, so I thought I'd do a video about it for anyone who might be looking at this one for potential. It's not on my watch list currently, and I don't think I'm going to bump any of the positions I'm currently looking at for this one. EPS growth is forecasted to grow. I like 5% or better. This is 20.35, so smashes that. I mean, EPS growth, if this is accurate, that is very, very high earnings per share growth on this one. And 5-year revenue estimate, 3.49%. So not huge growth in the revenue, but it does look like they expect some growth over time. Now, I will say, this being a company that provides paints and coverings like this, if companies typically like this are dependent on the housing market. So if a lot of new homes are being built, economy is good, people are buying homes, then you'll have people doing home improvement. In the building of new homes, you're going to have to put paint on the walls, that sort of thing. But if there is a slowdown, which there appears to be right now, this is one of the industries that will get hit. You know, people aren't going to be repainting their house if they're worried about paying the bills. Right, you're gonna pay your electric bill, your gas bill, your car bill, your phone bill for that matter, before you're going to pick up some new paint and slap it on the walls. That's just the way it is. Now let's keep going here. Again, as we saw, low payout ratio, I think we saw 44% in Yahoo Finance. This one's telling us 46.76%. It's still under 50%, so very low payout ratio. Dividend growth at 5%. Decent dividend growth on this one. They do pay out March, June, September, December timeframe. It looks like we went back to 2020, 54 cents. August 7th, 2020. 2021, August, they jumped it up to 59 cents. August 9th, 2022, jumped it up to 62 cents, and they just recently raised it up to 65 cents. So again, there's that 5% dividend growth you can see there. So overall, again, not bad metrics on this one. Just don't like the price currently. If you're looking for a paint company, this might be worth throwing on the watch list. See if it pulls back further. And again, this one is going to be impacted if we hit a recession, if home sales slow, those sort of things will impact a company like this because again, you're going to pay your, I am going to, so I'm sure you will too. You're going to pay your phone bill. You're going to pay for your gas. You're going to pay for your car bill, your mortgage, your insurance, your food. All that is going to get paid before you throw new paint on the wall, right? That's just the way it is. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company to see if I'm interested in investing. You can pause this and go through it. And that is it for this one. Let me know what you think of PPG. Is it in your portfolio? Is it one you're watching? Is it one you're avoiding altogether? Would be interested to get your take on it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I will work it into the rotation. I am looking at Texas Roadhouse. This is one subscriber brought up the other day, so I'm going to work that in one of these days here in an upcoming video, so look for that one. And if you have not joined the vested interest community, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this. I do a Stock Pick of the Day series Monday through Thursday where I look at a company like this and see if the pullback is presenting any value. So if you're into that kind of content, again, hit the subscribe button, hit the notification bell down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. So never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice comes from a certified financial advisor.